Everybody, Dave here, Hidden Freedom Investing, and today we're going to go through how I make an options trade against my dividend portfolio. So covered calls is what we're going to be doing today. I am going to be doing some live trades. It is during the market hours right now, and there's a couple positions that flashed up, and we're going to go ahead and make those trades. So I don't normally get to make a video during market hours, so I'm excited to do that today. So we are looking at my dividend portfolio here, and I've done many of videos of my dividend portfolio updates and all that, but I haven't really done any covered calls against any positions in here yet until last week. And we're going to put some live trades on today. So new positions flashed, and I'm going to kind of go through the process that I go through when I make the trade, what I look at, and all that. So let's go ahead and look at the dividend portfolio here and see what is flashing for the trades today. So what we're looking at here is we're looking at realty income, and that one's got 100 shares and it's flashing green. So I've set a conditional there, and the conditional looks at whether or not the position is over 100 shares, and it also looks at the unrealized gain loss percentage here. And so that one is pretty much flat in that account. These are two different accounts here, by the way, Schwab taxable, Schwab tax deferred. So that's the reason why that is flashing green. Conditional looks at this particular column here, and it also looks at this column here. Make sure we have 100 shares. And in this column here, I'm making sure I'm over -1%. Okay, because anything, anywhere around -1%, I can pretty much make some money on it. So it doesn't necessarily have to be exactly green. It can be green or -1% or anywhere in between, and it will flash green here. So that particular option, or that particular position there on realty income, I've already made a trade on that one. So if we look at my options history here, I put that on just a couple of days ago. So open date was 6/18, so that was last week. So I'm not going to be making a trade on that one today or on Verizon. So let's go back to the dividend portfolio here, and there's the Verizon one that's flashing green for us, but I noticed a couple of new ones today. So let's go ahead and take a look. Let's scroll up here, and so Coca-Cola is flashing green on us. We have 100 shares. And we also have, let's see here, and we're within that -1% to 0. So that's the reason why that one flashes green. And let's go and scroll up here, and it looks like we have Leggett and Platt as well. That's 100 shares above, and we're almost 8% up in that particular position. So let's go ahead and make some options trade in Schwab on Leg and Coca-Cola. So the first thing that we're going to look at is we're going to look at the chart here. We'll look at leg. So we're looking at leg here, and we kind of want to figure out where the strike is going to be and where I feel it's going to be safe and all that. So what I'm going to be looking for on leg is probably around the 40 strike price, and that's right around that 200 period moving average. So I feel like there'll be a sticking point. Even if it gets up there, it's going to hang around there for a while. So I feel like that's a pretty good upside if we can make money on it. So we'll look at the options here in a second. So let's go ahead and look at Coca-Cola while we're here. And Coca-Cola, so Coca-Cola, ideally I want to be around this 200 period moving average if I can, which would probably be about 51 or so. But I feel like 50 would be a decent strike as well. So we're going to kind of look at the 50 to 51 on Coca-Cola. And the next thing in the process that we're going to do is we're going to pull up Thinkorswim platform. And from the Thinkorswim platform, we're going to go ahead and look at the options here. And we're going to go out to, let's see, 24 days or so, 24 days to DTE. So that's days to expiration. We're on Coca-Cola. And we're going to kind of scroll down, and we're looking at about the 50s, right? So the 50s. And that's about a 9% of probability of being in the money. So, and fortunately it's only about $14 to $15. So I feel like going down to the 49.50s might be a better. That's about a 12% probability of being in the money at this 24 DTE. And we get about 20 bucks out of it. So that's pretty good. You know, even if it goes up above there, you know, we're not going to, you know, miss too much upside, because I feel like that 50 is kind of a sticking point. So I feel like the 20 to $20, or it's about 19 cents to 20 cents, which would be about 20 bucks, is a good point. So we'll go ahead and probably execute a trade on that one. So let's go ahead and look at the leg while we're in here. And see, leg. So we're going to go out to about 24 days of days to expiration. So I don't like to go out too far, but I don't, you know, I'm trying to make money too, right? These are covered calls. We're not going to be doing anything super risky here. So, you know, the goal is not to have our positions called away, but that's okay if they are as well. We just don't want to miss a lot of upside. So, and we're going to be looking at what, the 40 on that one. So if I remember correctly, let's go ahead and take a look, because I can't remember apparently. So leg. Yes, 40 is where we want to be on that one. So looking at the 40 strike here, and we're looking at the calls, and let's see here, 13% chance of probability of being in the money. That's where we want to be. And that's about, we could probably make about $35 on that one over that 24-day period. And you got holidays and weekends thrown in there and all that, and that don't really count. So it counts. I mean, it bleeds off, but you know, those are days that we don't have to worry about the stock going up, right? So, and today's a good day to sell against the leg as well, because I believe it is up 3.5%. So we want to sell on those up days if we can, because the premium is worth more. So I don't think Coca-Cola is up very much today. Yeah, it's up 0.5%. So we'll still sell one against Coca-Cola as well. So let's go ahead and make the trades in our Schwab account. If you're enjoying my content, go ahead and like and subscribe and hit that bell notification. Okay, we are logged into Schwab now. We're going to go ahead and make a couple of orders or a couple of trades. So let's go ahead. Right now I'm just on the all-in-one ticket, which will work. You can do the options up here and bring up the options change and all that, but we're going to just do the all-in-one order ticket here. So we're going to go ahead and type in leg and bring up the leg here, and we're going to do strategy. And we're going to do call, because we're doing covered calls. And so there we got the quotes and all that. So what we're going to do now is we're going to go down here and find the expiration date. We want to do 7/17, which is already selected. And for leg, what was the price that we wanted on leg? So I always forget, and I should have wrote this down. So we want 40-ish for leg. So let's go ahead and find the 40 strike price, which is already there. We're going to do a call, and we're going to go ahead and do sell to open, okay, because we're doing a covered call here. So we got leg, we got 7/17 is expiration date, 40 strike, call, sell to open. We're going to do 1 because we have 100 shares. And our mid price is 35 cents. Okay, so we'll just click that, because that's what we want. We want to try to split that bid and ask if we can. So limit order, I'm just going to do a market order. Okay, day only is fine. And it's funny as it changed it to 30 on the market order. So looks like we might not be able to do a market order at 35. So let's go ahead and see if we can make that order fill, and fill at 35. So place order here. There is our order there. So it did fill. It filled at 35 cents, which is $35. So that's interesting. I thought you could do a market order, and or of course the market order makes sense because it's going to just grab the bid price. So that does make sense. If I'm trying to split the difference there, you got to do a limit order. So and that makes sense. That's the first time I've tried that on Schwab's platform. So that one did fill. Let's go ahead and do the next order, and that one's on Coca-Cola. So let's go ahead and go to the all-in-one ticket and bring up Coca-Cola. Let's go to the options here and see, we want to do call. And what was the price we wanted on that one? The price was Coca-Cola. I think we're going to settle on $49.50. So we'll look at the 50s real quick to see what the price is, but we'll probably end up settling on $49.50. So, and it's the expiration date. We want to do 7/17. And let's see here, strike price is 49. Let's try 50 first. 50. And it's just not a lot of money there with the 50 strikes, so let's go ahead and see what the 49.50s are worth. And that's a little bit better. It's about 20 cents, 19 cents, 20 cents. So let's do it as sell to open. One contract. We have 100 shares, so we're gonna do one contract. All right, we'll do a limit, and let's do mid price here. And let's go ahead and do, let's just make sure everything right. Coca-Cola, 7/17 expiration date, 49.50 strike, call, sell to open, and then $19. Let's go ahead and review order. And let's go ahead and submit this order. So place order. And let's go to order status. There we go. And it filled, $19. So we made our orders, or we made our successful trades today on leg and Coca-Cola for our covered calls. The next thing to do is just fill in our options here, our options income here. And so let's go ahead and do that. Okay, looks like we're done there. This is kind of a work in progress. I probably need to automate some of this stuff, but some of this stuff is grabbing from Google Finance automatically, like current stock price and all that. But in general, it's getting what I need to have done. So let's go ahead and just, go ahead and fill in that. There we go. So we put in Coca-Cola, we put in leg, and days to expiration is 24. I just kind of put the stock price in there just to give me an idea of when I actually opened up the trade, and it's normally obviously pretty close to the stock trade price. And break-even price there is usually just the strike minus whatever the commission and premium is. Percent from in the money, that's real time. Now I must have so Coca-Cola is wrong, so let's change the strike price to 49.50. That's better. So what this is looking at here, percent from in the money, is that's just looking at the current price versus my strike price there. So the stock needs to go up 7%. That's Coca-Cola there. Needs to go up 7% to be in the money. So leg needs to go up 12% to be in the money. Okay. And then right now, all these expire right around, they all expire in July, so either second or third week. And $127 of income we're gonna make from those covered calls for the month of July. So as these positions, get up to be built up to be 100 shares in each position, and they're within that 1% or minus 1% to or above, I should say, I'll go ahead and start selling more covered calls. I do have other positions in here that are more than 100 shares. Like there's Wells Fargo, but it's down 12%, so I really can't make any money on that unless I go way out in time, which I'm not willing to do. So here's another one here. There's Pfizer there. That one's 105 shares, but it's still down 8%, so that's not really a candidate. So there's some other ones. There's AT&T there, but it's down 11%. So as more positions get built up, we will be selling some more covered calls in the future. And for right now, we just have these 4 on. And anyways, that's it in this video. If you have any questions, comments, concerns, go ahead and leave a comment below. Go ahead and like and subscribe, and we'll see you in the next video.